Well, once again, good afternoon to all of you gentlemen. And Rajesh, let me come to you. Give us the sense of what you're expecting to see at opening today. What are some levels that you're spotting? And do you believe that 24,000, that level is firmly here to stay now, because we're expected to open and positively today and see yet another gap up today?
Good morning, Sneh. Good morning, everyone. So yes, looking at overall setup, we believe that 24,000 is going to intact for some more couple of days as the put base has shifted higher. So major put writing activity has been observed around 23,800, 900 as well as 24,000 strike. So that is likely to act as a major support area for near-term perspective. If we start our day about 24,200, I think then again another round of short covering as the major call concentration is placed at 24,200 strike. So I think if we crosses 24,200, then another round of short covering can take Nifty further higher to 24,400 to 500 zone also. Though we are in expiry week, so I think some volatility would be there at higher level, but still the trend is intact on the bullish side. So buy on dip should be your strategy. 24,000 should be placed as a stop loss. We are projecting target of 24,400 to 500 in the continuation of this up move. For Bank Nifty, the trend is very strong. The way Bank Nifty has moved up in last couple of weeks, I think here also we may see further more traction towards 56,000 to 56,200 in the continuation of this up move. So at this juncture, 55,100 needs to keep as a stop loss to buy any minor dip in the Bank Nifty also.
All right, so outlook remains bullish when it comes to both the benchmark indices. But Digant, a very good morning and thank you so much for your time. Digant, the move that we are seeing on the benchmark indices, that's really heartening to note that given all that we have seen, the kind of volatility that we have seen in the past with respect to tariff and the slowdown concerns, that is fading away a bit. But Digant, help us understand, are we out of the woods right now? And do you believe that this sentiment and this FII making a comeback is here to stay? This up move can continue for some more time?
Hi, morning. Thanks. Nice to be here. See, I think, the India-specific correction started somewhere in September, October. And by March, we were almost at the end of this India-specific correction, which is, our economies were slowing down. Then FIIs first went to China, then they went to US in the excitement of Trump getting elected. So I think by March, we were done. And then in April, we saw one more down round from these Trump tariffs. And I think now, both the corrections are over. The local correction and the global correction is over. So I think worst probably is over because, see, whatever happens to the world, lower crude oil prices and lower interest rates and lower commodities, these have always been good for India and specifically small caps. So I think the worst is clearly over, but I would not use the word that we are out of the woods because we will still see a lot of volatility. When US slows down, the world growth slows down. And when world growth slows down, the P's across, the equity indices have to be mellowed down. So I don't think we are out. We are out of the woods in the sense probably the worst is over, but I don't see, the index making a new high or, the economy roaring back again. That will take, at least 6 to 12 months. But I think we are in a nice consolidation phase, both in terms of economy, earnings, and, even the markets probably.
Okay, Digant, well, hold that thought. Let's also bring on board my colleague Gaurav, who's joining us with a list of all the stocks that could be in the spotlight today and potential newsmakers as well. Gaurav, take us through that list.
Well, yes. First, let's talk about AU Small Finance Bank because weak set of number is what we have seen for Q4 FY25. Profitability declined almost by 5% on a sequential basis, and on the other hand, credit cost actually increased almost to 14% in MFI segment. And when we talk about net interest margins, we have seen a decline, and at the same time, management has also stated that net interest margins may remain under pressure. So definitely watching out on this counter. Other than that, Havells actually came up with good set of numbers. Revenue increased almost by 20%, while profitability increased almost by 16% on a year-on-year basis. Tata Communications corporation on the other hand reported mixed set of numbers, because when we talk about revenue, that increased almost by 3% on a sequential basis. We saw PAT actually increasing threefold. That was because of an exceptional item. But when we talk about EBITDA margin, we saw a decline of around 160 basis points. Other than that, we also have Bharti Airtel, which will be in focus today, because Airtel is going to acquire 400 megahertz of spectrum from Adani Data Networks. IndusInd Bank is also going to be in focus, because yesterday there was a news flow which suggested that IndusInd Bank has appointed external auditor for the forensic audit of their MFI segment. What the bank has stated is that the internal audit department is conducting a review on the bank's MFI statement as a part of process of finalizing the accounts, and no external auditor has been appointed by the bank. Ashoka Buildcon is also going to be in focus, because company has received a letter of acceptance from Central Railway, and the project value is going to be worth 568 crore rupees for the same. Varun Beverages is also going to be in focus, because company has started commercial production of soft beverages, soft drinks and juices at one of their plants in Uttar Pradesh. And lastly, we also have Ambuja Cement, which will be in focus, because management has now approved execution of share purchase agreement of around 37% stake in Orient Cement. For this, they will be rolling out the open offer to acquire 26% of the stake at a price of 395 rupees per share. So definitely watching out on all these counters on the back of the news flow that we have received in the morning.
Alright, thank you so much, Gaurav, for getting us that list. So a lot of stocks to talk about, a lot of those earnings candidate. But again, let me come to you for your take on IT pack and specifically HCL Tech, because after seeing over 20% correction in the recent while, some of these brokerages are liking the kind of guidance that the company has given in such uncertain times, though the numbers looked quite mixed as of now. Help us with your understanding on the numbers, as well as within the IT pack. If you have any preferences, do share that.
Yeah. So see, IT rallied all the way till December or January on the back of thinking that if Trump comes, more tax cuts will happen. Those tax cuts will flow as revenues to our Indian IT companies. And then once they realize that okay, US may actually slow down, and there is this AI disruption threat which is anyways there for the last 6-9 months, IT pack has corrected quite significantly. A lot of them are in that 20-25 times price to earnings and 3 to 4% dividend yields. So I think on the face of it, the sector has become attractive, and we are in fact thinking of taking a call that large IT stocks in the next 12 months can probably give better returns than large banks. Large banks have already had their day in the sun. They've already run ahead of probably what the earnings catch up will be. So large IT, we are incrementally turning positive, because valuations are comfortable. Prices have corrected a lot, and see, the changes are always gradual. It's not suddenly that AI will come in 1 year everything will go to zero. These things never happen. So I think HCL Tech, Wipro, L&T Mindtree, there are a lot of names, and we are bullish on the sector. So yeah, that's the view. Numbers may take time to come, but yeah, we should have a 12-month view, and I think things will be okay.
What is your pecking order looking like? Because, and also I wanted to know specifically, how do you see some of these high beta names like Forge, Persistent, even add to that list HCL Tech and other Tech M sort of counters to move up? Because in the year 2024, we have seen these stocks outperforming the large caps from the likes of TCS, Wipro and Infosys. Digant, this question is for you.
Okay. Yeah. So see, I think I don't want to talk about outperformance or underperformance right away, because see, what we have said is that the worst of Trump we have already seen, but that does not mean there will not be more actions and more volatility. So I think IT index for the last many years have mapped what the Nasdaq does, or what the US markets do. And I think till volatility there subsides, which I think will be by September, October, once the debt refinancing problem of US reaches some sort of logical conclusion, it's very difficult to give a precise view on the numbers and what happens. But logically, we think that we are hitting bottoms in a lot of these sectors, and yeah, amongst the large pack, I think right now is not the time to differentiate A versus B versus C. Right now, I think the whole pack should be more of a focus for an investor with a 12-18-month outlook. And then, we can start differentiating maybe after September once we have some more clarity on what US is up to.
Bullish take coming in on the IT pack from Digant, but let's move on to some macros then. And in its latest bulletin, the RBI said India's domestic consumption and investment sentiment is less susceptible to external headwinds. The central bank also reiterated that India remains a preferable investment destination in the face of global uncertainties. My colleague Anjali is joining us with all the key highlights of this report.
The Reserve Bank of India has come out with its bulletin for the month of April, and the RBI has noted that there will be a deleterious impact of escalating trade tensions on global growth. That is inevitable, and India's economic growth could also be impacted through weaker external demand. There could also be a potential pass-through of tariffs to consumer prices, and that could keep the inflation levels elevated. However, the RBI did note that domestic growth engines of consumption and investments are relatively less susceptible to external headwinds, and therefore India's domestic consumption and investment is likely to boost growth in the country. Prospects for the farm sector were boosted by the forecast of above normal southwest monsoon for the year 2025, and the inflation levels have also moderated to a 67-month low due to a moderation in food prices. For the month of March, India recorded headline inflation of 3.3%, and that was a 67-month low. So that is also a good sign. India has become a preferable investment destination also, and this is due to our position as the fastest growing major economy, as well as the macroeconomic stability that exists in the country. The RBI noted that there is continued positivity across sectors. Manufacturing is showing higher capacity utilization, and there is improved business sentiment in the sector. Services and infrastructure firms remain upbeat on demand, pricing and profitability. So those are the major takeaways from RBI's bulletin for the month of April.
All right, thank you so much, Anjali, for getting us that take. So even RBI is highlighting that the weak external demand may impact India's economic growth. And again, the consensus call that is coming right now is that why not focus on some of the domestic plays and rather ignore some of the export-oriented counters at this point in time, given the uncertain environment, and maybe the picture will be clear in the medium term. But again, within the domestic plays, which sectors do you like at this point in time? Maybe it's power, maybe is the consumption theory. Which is the segment that you like the most when it comes to the domestic counters?
So there are two segments which we are bullish on. One is see, in the banking space, the large banks have already rallied. But in this sector we expect rotation to play out. Like in the first round, the HDFCs, Kotaks, ICICIs of the world, they have rallied. Now in the second round, you will see the second rung of stocks which will probably lead the rally. Something like an Equitas bank or an Ujjivan small finance bank or even AU bank. They may not report good numbers this quarter, but I think the turnaround is very much there. Maybe 1 or 2 quarters you will see numbers turning around. So this is one space, which is say a microfinance heavy or high yield lending heavy. This is one space which can beautifully turn around in the next few quarters, and that is where these are domestic stories. They benefit from the RBI easing of liquidity and regulations. So I think second rung stocks is what we have to focus on. We are focusing on these names which I just spoke, and then this whole domestic consumption revival, it's been talked about, and I think somewhere in September, the monsoons will probably be good. So domestic consumption is one sector which we look at. See, there are multiple sub-segments within domestic consumption. Like there is building material space. Then there is, something like a Whirlpool, which is in the consumer durable space. There's something in the dairy space. So there are a lot of choices as we see it. And yeah, domestic consumption is a good hunting ground. So these two sectors, the BFSI, the second rung BFSI stocks, and domestic consumption.
Point taken, Digant. And Rajesh, coming to you, just to extend the point that Digant was making right now, while we also got your outlook on BFSI, I want to get your sense on the entire FMCG pack, how it's looking like on the charts for you, and what would be your preferred picks when it comes to the FMCG pack? Would you rather stick with Nifty companies, or would you foray into broader themes like retail, like fashion? What would be your sense when it comes to Nifty FMCG?
So BFSI clearly in bullish trajectory, and I think here we may see bullish traction to continue further. And I think some of the large cap bank like Kotak Bank, HDFC Bank, ICICI Bank are looking more promising. Even from the PSU banking side, SBI is looking attractive to initiate positional trade in these counters. Even from the NBFC space, I think some of the stocks like from AMC, HDFC AMC is looking promising. Poonawalla FinCorp, these are stocks are also looking bullish. LIC Housing Finance can be looked at. But from FMCG pack, I think stock, large cap FMCG stocks like Marico, as well as Pidilite, these stocks are looking more promising as we have witnessed a breakout on the near term as well as on the short term charts. So I think Marico and Pidilite would be the stock where we are focusing at this juncture. But some of the stocks from the quick commerce like Zomato is Eternal is also looking more bullish on the near term structure. So I think here also one can focus. So I think whole FMCG basket is showing good traction in terms of buying. So I think in the near term to short term perspective, one can look for a stock like Marico as well as Pidilite, Eternal, and another stock United Sprit is also looking bullish at this juncture.
That's about the consumption theme, but sticking with that, we also have the numbers coming in from Havells, because this time it seems to be an all-round beat, but the commentary specifically for the AC segment doesn't look that great, because in the Q4, yes, there was a good contribution coming in from the Lloyd segment, and even switchgear margins have seen an improvement. But when it comes to the outlook, the management highlights that the delayed summer season is expected to affect the near-term performance of the company, and along with that, the other major key takeaway was their commentary on the cables and the wire segment, because we have been discussing about the entry of the two major players or two conglomerates into this particular segment, be it Aditya Birla Group and the Adani Group. And Havells has said that this competition could drive more formalization into the industry, while it also highlighted that the cable segment needs several approvals and wires would require significant effort on retail penetration. So on one side, the AC segment, the commentary is not that great, but on the flip side, let's watch out for some of the other counters within the cable and wire segment. But Kunal, let me come to you to have your take on Havells as well as Voltas. How are they placed when it comes to the technical setup? Because of late, these counters have been showing a bit of a momentum, and especially Havells.
Yeah, I think Havells is something which has been looking attractive. Fourth or the third consecutive week where the stock has moved up higher. We've seen decent price action, volume back move for Havells over the very short term. The only concern with Havells is the fickle nature of trend, because the stock goes into a couple of weeks of price uptrend and then immediately the stock reverses. So we don't see a pause into the stock price. We generally see those heightened moves, V-shaped recoveries, V-shaped rallies, and then followed by sharper corrections. So that's the only concern with the stock like Havells. And recently the stock has converted its breakout into an inverted head and shoulder pattern breakout. So that support for Havells in the short term is around the 1600 mark. I would look out for maybe a minor dip into the stock price as a good entry point, say close to 1620, 1600 zone could be a good zone for traders who are looking at a contra buy. Voltas on the other hand, I think could be a very good contra bet, because the stock has been a late mover. It's still not participated in the same gusto with respect to other peers, and you've also seen Voltas being one of the strong stocks in the mid cap tier to large cap category on the last 2-3 years of a major time frame. So I think in that context, the risk reward could be fairly attractive. Maybe there could be a chance that the stock may just about remain sideways for a few more days or a couple of weeks. But I believe for traders who have a time horizon of at least 1 month to 3 months, I think betting on Voltas at current levels could actually turn out to be a good play.
Okay, bullish call coming in on Voltas as well as Havells, but Digant, coming to you, given the kind of activity we've seen in the entire wires and cable space, of course after the Adani Group's foray into it, if you had to play this pack, or would you prefer a KEI, Polycab or Havells? What would be your preferred pick from this space?
I think, the fastest growing piece in all this is actually the wires and cables business. So maybe, something like a KEI has corrected very well, and then, any competition which will come and which will drive, it is at least 2-3 years away. So So I think there is good growth, and it's a good proxy to play the entire capex theme. Be it the government capex, be it the private residential capex, or the factory capex. So I think KEI should be a little better placed than Havells, because Havells has a lot of other segments like fans and appliances, which are not very competitive and not doing so well. So maybe KEI is a better and a preferred bet. And we also like something like a Ram Ratna wires or precision wires. They are also into these copper products, products which eventually go into air conditioners, and they have a slightly different kind of wires which are used in motors. So I think a KEI and something like a Ram Ratna wires are something we like in this space.
All right, so let's watch out for KEI specifically on the back of Havells' management commentary. But other than that, today one of the other result candidate is AU Small Finance Bank, because the company did come out with the earnings, said it seems to be a steady quarter for them, but the commentary is not looking that great, because the company has highlighted some of the undercurrents. But on the flip side, they have reiterated their FY27 guidance and directionally hinting for a better FY26, and the stock has seen a bit of an up move. But Rajesh, help us with your analysis on the stock, because I believe for the past 4 days, barring just yesterday, we have seen great moves on AU Small Finance Bank, still sustaining above those 600 levels. But what do you make out of it? Is this stock ready for a breakout, or should halt at this price point?
So firstly, if we analyze the near-term structure, stock is now negotiating with its previous swing high of Feb 2025. So I think any move beyond 620 level can take stock further higher to 650, even 660 zone. As near-term, short-term structure is bullish, stock is holding above all its near-term, short-term moving averages. This is the third consecutive week where stock is making higher high-low formation. So it's an indication of sustained buying action is taking place in this counter, and whole banking basket is showing good traction in terms of buying. So I think 620 is the immediate level to watch for. If it crosses, I think one can initiate long position with stop loss of 615 then, and then possible target towards 640, 650 we can see in the near-term perspective.
Take on the entire outlook when it comes to AU Small Finance Bank. Kunal, let's talk about yet another earnings candidate. We're in the middle of thick rather of the earnings season. Tata Communications is also a stock that came out with its numbers yesterday. It's been a largely mixed set of numbers coming in. Margins are looking weak, and PAT has only been boosted on the back of an exceptional item. Revenue is up 3.3% sequentially. PAT has seen quite the surge, but EBITDA and EBITDA margins both have shrunk on a sequential basis. So mixed set and weak margins is what we have seen for Tata Communications for quarter 4. But while the earnings are largely mixed, Kunal, what's the outlook on the charts? And if you see the stock in the last 3 months or 6 months, the kind of moves that we have seen on the stock, keeping that in mind, what's the outlook going ahead as well?
Yeah, I've been tracking the stock very closely, and Sneh, I remember I think close to a point where the stock almost a couple of months back, or a 1.5 odd month back, when it was at 1200 kind of a zone, there was a point where the stock was almost at a 40% divergence from its long-term moving averages. And so the 200 DMA was placed at I think 1800 plus mark. The stock was at 1200ish kind of in a zone. From there, the stock has recovered exceptionally well. It's almost been a V-shaped recovery for Tata Communications. So which means that the base for the stock has moved up, or rather the base has been established, and the stock has moved up higher from those base zones. I strongly believe that we could be looking at a point where Tata Communication could be a good candidate of a buy on dips, and especially with the point in case the stock drips down to say 1550, 1540 mark, say on an intraday basis, that could actually turn out to be a good contra zone.
All right, so let's watch out for Tata Communications, one of the other result candidates. But moving on, let's put the spotlight back on the IT space, because as Q4 fails to enthuse the investors, the sector is at crossroads. While the bulls make a case for attractive valuations and a healthy deal win trend, the bears are of the view that the discretionary spends will remain soft, coupled with tariff jitters delaying decision making. Is the worst finally over for Indian IT, or will the sector have to brace for more shocks? My colleague Varun and Sharad joins in with the bull and the bear case. Over to you.
Well, yes, the Indian IT space, it has seen some kind of beating over the last 3 odd months, Varun. But interestingly, there is a sliver of hope. Okay. I would like to put my first bull case point, and that is that there hasn't been any major cancellation of orders. Okay. If you look at TCVs of Wipro, Infosys and TCS, they have actually been on a surprisingly on the upper side. You see the numbers over here, that's on the green side. So that's my first point.
Definitely the orders might be good, the TCV have shown a good growth, but if you look at the overall constant currency revenues, they have been modest. In fact, the expectations were modest, and the overall performance, if you look for the IT companies, they were actually muted. Now look at Wipro, the overall constant currency growth has been down by 0.8%. For Infosys, the big guy, the overall constant currency growth has been down by around 3.5%. For TCS also, it has been down by around 1%. So you might have order book, you might have the TCVs who are going up, but yes, the overall performance, on the ground performance has not been that great. Even when compared to expectation, the companies, I mean Wipro, TCS, Infosys, any company if you mark, they have actually shown performance less than what was expected. Look at TCS, the overall miss was by around 0.6%. For Wipro, it was a miss of around 0.9%. And for Infosys, the miss was by around 3% versus expectation. So people were expecting, yes, the overall performance would be muted, but the performance was more muted than what was expected, and that is my first bear point.
Well, apart from this, this is what's happening. But what's the future? That is important. The FY26 guidance, that is good. It is not really bad as what we had expected. The future is not that bad, and all of them, Wipro, Infosys, TCS, you look at the screen, the order book is still not very bad. It is maintained, but the FY26 revenues over here, especially Infosys and TCS, over there, it has been coming on the positive side. So, of course, there seems like there is hope as well.
The future depends upon the headcount, and look at the headcount addition, what has happened in this quarter. For Wipro, it is 614. For Infosys, it is just 200, and for TCS, it is 625. And continuously, we are hearing reports out people sitting on bench. There are attritions happening in IT sector, and upon that, if you look at the commentary of majority of the companies, they are saying that the overall discretionary spending that is reducing. If you look at Accenture also, even they have highlighted some of the concerns. So yes, you might have a good future, but your future depends upon headcount, and that is a lead indicator which is showing you that there is some problem in the overall IT sector.
Well, the sector, there might be issues, but as an investor, we also look at valuations. That is very important.
Right.
And if you look at the valuations this time, post the results, they have actually turned very attractive. And of course, do remember, FIs also have strong holdings in the IT space as well. And also the DIs, they also have a big conviction in this space as well. So there might be some money flowing in because the valuations have turned attractive, and they're actually significantly lower compared to the long-term averages.
Okay, the valuations might be attractive, but if you look at the overall brokerage, verdict on what they have told about on the stocks, majority of them have actually cut their price target, especially when you compare the price target with the Q3 results. Look at for Infosys, Wipro, and majority of the companies, even HCL Tech, after such good results, there are brokerage houses who have cut their price target. For these three companies, I mean TCS, Infosys and Wipro, you have seen a price target cut of around 15 to 20% when you compare the price target from Q3. So even your valuations might be attractive, but brokerage houses are saying that there is something bad, and that's the reason there is a big price target cut of around 15 to 20%.
Well, yes, sir, there are some brokerages coming up with target cuts, but there are some other brokerage houses also which they have given a bull case, be it Motilal Oswal as well as Kotak Securities. Over here also there is a improvement, you could say 15 to 20% return potential coming in from the current levels because of course, valuations being attractive, and interestingly, if the future holds good for these companies, then it will augur well for both TCS and Infosys as well.
If the future was so good, then there would not have been an EPS cut. Look at majority of the companies. You can see an EPS cut of around 3 to 4% for majority of the companies. For Wipro, after the results, the EPS cut on a consensus basis was around 3.4%. For Infosys, it was 4%, and for TCS, it was 3.9%. Even though you could have seen some of the broking house who have raised their overall target, but majority have cut their target, and they have cut their EPS estimates on these companies because of the results that they have given, and because of the bleak future that these companies have, especially after Donald Trump coming and after the tariff war, trade war which is going on. There is a lot of uncertainty with respect to US. People are speaking about recession, and that's a big headwind for IT companies.
Well, yes, there is a confusion between me and Varun actually, which side to actually fall on, and we'll just leave it to our viewers what to take out of it.
The jury is out when it comes to the Indian IT pack. We've seen some numbers coming in and the mid-cap pack is still left. So once we have those numbers in, maybe we could come to a final conclusion on what to make of the Nifty IT pack. But let's move on, and before we move on, rather, let's just take a look at what the pre-open rates are and what the market is shaping up to be like and indicating what could be in today's trade. A 0.6% uptick coming in on the Nifty in the pre-open, 24,325 thereabouts is what we are seeing right now for the Sensex as well. A 0.6% uptick, largely in tandem with what the GIFT Nifty was implying. And well, Sensex is expected to open above the 80,000 mark. So that is something that's key to watch out for in today's trading session. But we'll give the rates some time to settle and revisit them in a bit from now. But time now to get in some mid-cap ideas from our experts who are joining us. And Rajesh, we'll come to you first. What's your mid-cap bet for the day and what's looking good today?
The first stock is Max Healthcare. If we analyze the daily setup, stock managed to give breakout of its falling trend line. Short covering was there in the derivative data. Stock is holding above 50-day moving average. The way stock managed to give breakout, we believe that here we could see furthermore rally towards 1190. So one can buy Max Health with stop loss of 1105. And the second stock is from the real estate space, that is Macrotech developer. So stock again, managed to give falling trend line breakout on the weekly as well as on the daily chart. Short covering was there in the previous day. Most of the real estate space stocks have done well in the previous day also. So Lodha can be looked at to buy at this juncture. Possible target towards 1360 we may see in the near term perspective. So one can buy with stop loss of 1290.
Developers as well as Max Healthcare, those are the stocks that Rajesh is tracking. But Kunal, what about you within the mid-cap space? Which stock is looking attractive to you this morning?